This is a video report analysis of Bristow Group as part of Burkenroad Reports, a program of Tulane University A.B. Freeman School of Business. Analysts are Kyle Block, Ji-Hung Yu, and John Jung. The agenda for this video report goes as follows. First, we will talk about the company overview. Then we will provide some information about Bristow's financial performances and financial activities. After that, we will discuss our valuation models and then state our valuation results. Bristow Group Incorporated, ticker symbol BRS on the New York Stock Exchange, is headquartered in Houston, Texas, and is one of the world's largest providers of contract helicopter services, especially providing these services to the offshore energy industries. As of the release of this report, Bristow is trading at $78.91. Bristow's market cap is approximately $2.94 billion with 36.62 million shares outstanding. This chart shows Bristow's stock performance over the past several years. Because of the financial crisis in 2008, Bristow's stock price dropped from $57.80 in May 2008 to $17.41 in March 2009. However, after this occurrence, stock price has been consistently increasing up to today. In February 2013, the stock price returned back to its original price before the financial crisis. As stated earlier, the price of this stock as of this report is $78.91. We believe that one of Bristow stock's price drivers is its revenue, which has consistently increased since 2009. This chart shows the adjusted earnings before interest, taxes, depreciation, amortization, and restructuring, otherwise known as EBITDAR, from 2009 to 2013. The growth rate is close to about 10% each year, and the growth rate from 2012 to 2013 is as high as 16.3%. This increase in the earnings growth rate is a strong support of the increase in future stock prices. Business can be divided into 5 regions by geography: Europe, West Africa, North America, Australia, and other international, which mainly includes Bristow's businesses in South America. The European business unit often contributes nearly 40% of the company's total earnings, with its second largest contributor being the West Africa business unit, which is usually around 20%. The North American and other international business units each make up to 15% of the total earnings, while the Australia business unit makes up the final 10%. In the purpose of future expansion, the company is planning on selling off all of its small helicopters in the next few years and will start only buying medium and large helicopters for the fleet. Bristow's financial structure is quite healthy. The company has maintained a strong liquidity position. We predict that by 2018, almost all of Bristow's long-term debts currently out would be paid off, and that given the company's cash situation, there would not be a significant amount added. Also, we estimate that over the next 5 years, Bristow would be able to pay off its revolving line of credit. Keeping all these factors in mind, we have given Bristow Group a 12-month target stock price of $84 based on net asset value discount, price to earnings, enterprise value to EBITDA, and enterprise value to sales models. We forecasted this target price by dividing next year's forecasted total asset by next year forecasted weighted shares outstanding, and then discount that result by 15%. For the price to earnings valuation model, we use the next year's forecasted income from continuing operations divided by the forecasted weighted shares outstanding. Then we multiply the result by the average price to earnings of 2 comparable peer companies in the same industry, which in this case were PHI Incorporated and ERA Group Incorporated. For the enterprise to EBITDA valuation model, we first multiplied next year's forecasted EBITDA by the average enterprise to EBITDA of the same 2 comparable peer companies. We then divided the result by the forecasted weighted shares outstanding. For the enterprise to sales valuation model, we went through the same process. First, we multiplied next year's forecasted sales by the average enterprise to sales of the 2 comparable companies, and then we divided the result by next year's forecasted weighted shares outstanding. Finally, we took the average of the 4 forecasted prices from each of the models. We get the 12-month target price, which is $84. It is a 6.45% increase from our current stock price. This concludes our video presentation. Thank you for watching.